This is Gerardo Del Real along with my co-host, Mr. Nick Hodge. This is a special New Orleans Investment Conference edition of Bizarro World. Mr. Hodge, this is episode 90. How are you today?
Goodness gracious, I feel like I'm 90 after the year we've endured in 2020. How are you doing, Gerardo?
Oh, Nick, I'm sorry. You have a fly on your head. I didn't want minutes to go by without anybody telling you because I care about you.
Oh, well, you got a fly swatter I can use?
Nick, it's been a hell of a year. It's been a hell of a week. A lot going on. I am incredibly excited to be with everybody again. I wish we were in person. As you all know, the New Orleans Investment Conference is by far my personal favorite conference to attend, both on the retail side and as a speaker. It's been that way for over a decade. I'd love to hear your take, Nick, on the conference, and then we can get into last year and why people are really here, how people can make some money in this new bull market.
Well, we love New Orleans, of course. I've been to New Orleans many years running. And last year during this segment, which was a true breakout session in the Hilton New Orleans Riverside, as it has been for the past couple of years, we recorded an episode of Bizarro World, just like we're doing here, and it's sad not to be back in that setting. You're right. That's the first thing I was thinking of today when I was getting ready to record and I was setting up the software. It's certainly not the same ambiance and feel, and certainly we know that that breakout hall or that exhibit hall is one of the prime features of the conference, and we won't get to rub elbows or shake hands or do air high fives or whatever it is this year. So going to miss that. And of course, going to miss the food, the oysters right there in Drago's itself, or Cochon around the corner, or La Boca for steak, which have become staples, I know, of going to New Orleans annually. So anyway, everyone misses all that. Sorry to drone on. How about you, Gerardo?
The same. I want to start off by, sending all my best to everybody on the coast. They've been hammered repeatedly with back-to-back storms and potential hurricanes, and they're in the midst of one now. And so just, thoughts and good energy to everybody out there. I can't wait to be in person next year and do this. But for the time being, I'm excited to be here. Let's get right into it, Nick. A couple of things before we start. You and I have a special announcement at the end that I hope everybody sticks around for. It's something that's important for you. It's important for me, and hopefully important to all of you. But let's get to last year. Before we start giving advice and pulling out our crystal ball and telling people what we think is going to make them some money this year, I think people probably want some accountability. We're big on that. And would want us to revisit what came out of our mouth last year, right? So let's get right into it. We talked last year, gold was around the $1,500 level. The atmosphere was one of pessimism and skepticism, even amongst the robust crowd that we were able to generate near the end of the night. And we had the good fortune, and the people were incredible. We had an after session, a Q&A that probably lasted 35 to 45 minutes. And I wish we would have recorded that. There was a lot of really good banter during that session. But, let's get right into where we started last year. People asked us immediately, listen, we're here every year. We pay money. We sit. You tell us about the bull case for precious metals. You tell us about the debasement of fiat currencies. You tell us about how confidence in government is dying. And yet here is gold stuck at 1,500. And every year the juniors haven't done a thing. And so the biggest question was, when the heck are these juniors going to start moving? And by moving, they didn't mean downwards. They meant upwards, right?
Sure.
And so I'll let you take it from there, Nick.
No, you were doing a great job. You should probably keep going. But yeah, gold was at $1,500, and sentiment was, like you said, a bit pessimistic. It was the beaten dog syndrome, as I had started to call it back then, right? We had been beaten down so many times, especially after the tease that was 2016, which in hindsight turns out to be the start of the rekindling of the bull market. But, we didn't think we could get back there. And frankly, some stocks still haven't, which we can talk about in a minute. Room for upside still. But that was just it. It was talk about the dollar and talk about the debt and talk about Europe, which is much more interesting. There you go. Is a much more interesting conversation this year, given the pandemic, and more importantly for the audience here, the response to that pandemic in terms of, well, we'll get into it, stimulus and money printing and many other things. And so you had said, Gerardo, because I went back and I listened to it, that the juniors were going to move in Q1 because it was tax loss season at the end of a bear market. And this was when you needed to start establishing positions for generational wealth creation opportunities because, shares were being puked up at 5 and 10 and 20 cents on some quality companies. And not that the share price is indicative of the valuation, of course, we can talk about that separately. But you turned out to be correct, and we'll put up some charts and likely have at this point already once this is edited of when certain names started to break out, and it's been quite the ride, not just for the stocks but for gold as well, having taken out record highs, which is very important for the New Orleans Investment Conference, and now sitting up several $100s higher than it was when we convened at this time last year.
Let's talk about some of those names. We talked Almaden Minerals last year. We talked Midas Gold. We talked Revival Gold. We talked MAGNAGOLD, TERANGA, and the lone stock on that list that hasn't quite performed yet, but is on the cusp of a major milestone, Azarga Uranium, right? And so I think, again, by the time you all watch this, without me having to recite the percentage moves, most of these names have doubled, tripled. In the case of Magna, I think it was trading somewhere along the 25 to 30 cent level at the time. And here it is sitting, over $1.50 per share. And I joke with everybody that the next Magna Gold is Magna Gold because I think it has that much runway, right? And so we'll talk later on about how you can keep track of these companies and how you can get our insights and why we think these companies are headed higher. But, the one underperformer has been Azarga Uranium. And let's get that out of the way. They are on the cusp of what I believe is going to be a favorable permitting decision, meaning they'll get the final couple of permits they need to become an instant takeout target. The stock is frankly exactly where it was a year ago. So dead money, right? Let's call that what it is. We doubled and tripled and quadrupled, in many cases, your money with other stocks. But with Azarga, it's just sat there. And the one market that I was wrong about this year and that many have been wrong about for many years. Forever is the uranium bull market, which, frankly, still isn't here. And just like exploration and the budgets in the precious metal space pointed towards a clear bull market that was on the way, right? Mid-tiers and majors not having the ability to replenish that reserve base. They were going to need to get out there and start getting aggressive and investing in these juniors. And then the quality juniors that had quality properties and knew how to explore them and develop them were going to catch a bid. We called that pretty well. It hasn't yet happened in the uranium space, but I'm here to tell everybody it's coming and it will be worth the wait. And if you want some very good exposure with minimal risk via junior resource stock risk reward parameters, Azarga Uranium is an incredible speculation. So let's get the underperformer out of the way. Any thoughts on Azarga, Mr. Hodge?
I have a thought on Azarga, and then I want to have you answer something about Almaden. And so not only is the uranium space in a place where the majors, there's only one or two anyway, are out there, exploring and JVing, but we're in a place where production curtailments are being announced and extended. And so this would be like, not only if Barrick, wasn't JVing or partnering or exploring, but if they were like, hey, we're just going to curtail production, right? It's like the scenario you're facing in the uranium space. And so a lot of play in there. I think sentiment has changed even among the most ardent uranium bulls in the past year. I even gave a presentation earlier this year, though it feels like 10 years ago, again, given how 2020 has gone, where, friends of ours like ALX Uranium was no longer ALX Uranium, and what that means for as far as an indication for a bottom of the uranium space. And so Azarga, obviously, a very high quality speculation, being one of the most prospective, if not the most prospective, in situ recovery uranium projects in North America and the United States, obviously. And so those are my thoughts on Azarga. But let's talk about Almaden, because actually, when I pulled the chart up, you said without mentioning percentages, but I put them all on a chart and I looked at them all, Gerardo. Almaden had gone up 50% and came down a little bit, back to nearly flat. And I was also surprised to remember, because I forget things now, that we were talking about Almaden's permitting process being suspended around this time last year, and how we thought that it was going to be a short-term thing that hasn't turned out to be a short-term thing. But nonetheless, I think the categorization of it hasn't changed in our minds, in that it's not material to Almaden, in that the lawsuit is not about their property or their project. And it's just now starting to be resolved. So I guess a couple of points, and then just a good thing to talk about is things always take longer in the mining space than you ever think they're going to take, whether that's we'll have results out in mid to late September, which is, early to mid October, or we'll have our permit in 2018, which is 2020 or 2021. And so just that extended time horizon always seems to be par for the course in mining, rather than the exception. And then, of course, a global pandemic also slows things down. And so all that to say, and then I guess, and I'll let you speak to Almaden, is that even with the permit process suspended, Almaden, because of the quality of its asset, and I would argue the team and other things that they've done leading up to this bull market, is able to ascend 50%, even while their, like I said, permitting process is suspended. And then, of course, we had a little bit of a gold sell-off here in the past, call it a month or whatever, with dollar strengthening that took all gold equities down with them. But I wanted to talk about Almaden just for a second. Sorry for meandering.
No, important update. So the last time we talked Almaden at the New Orleans Investment Conference, the fringe NGO, as I described it, had included Almaden in a lawsuit that basically challenged the constitutionality of the entire Mexican mining law. So if you saw who was defending against that, and they still are, it's the Mexican government, it's the mining commission, the minister of the economy, it's everybody who's anybody. Every big institution in Mexico is pushing back against this. The direction that's going to go. Eventually it gets thrown out of court, and I think we finally are close to seeing that being resolved. So what's happened since then was a pandemic happened, which delayed the review of whether or not the local authority that would issue and review Almaden's permit had the authority to continue on with its review. Mind you, we were weeks away from a permitting decision when the review for Almaden's permit was stopped. And it was stopped because Semarnat wanted clarity from the Mexican government as to whether or not they were able to continue on with their duty to review the permit. The Mexican government and the lower court has now said, absolutely, you have a duty to review this back in your court, right? And that's where we're at now. So if we assume that the timeline that we had prior to the suspension of the review process kicks back in, we should be weeks away from a decision. And again, I've been to the property. I've spoken to the local community. I'm familiar with the Poliquins who had the management team there. Relations are excellent. The economic stimulus the project would bring is substantial and wanted. Support is overwhelming. And so I do believe the permitting decision will be favorable. And I think in very short order, and I've been saying this for years, we get a potential suitor step up, maybe an Agnico Eagle or somebody like that. It would fit very nicely in their portfolio, in its portfolio, right? And so I think Almaden is an incredible speculation. The ruling for Semarnat to continue reviewing the permit decision is official now. And so now we just wait for Semarnat to issue a declaration. And I think that's imminent.
That's why you write one of the best, if not the best, junior resource newsletters out there, because you follow all those details on not just Almaden, but other companies as well. Where do you want to go next, Gerardo?
Let's go. You mentioned me being one of the best. I think there's a handful of people here that would probably disagree, but it's fun exchanging ideas, and you know, the proof is in the pudding, right? That's always the fun part. Let's talk one of your picks last year that no one believed in, TERANGA. How'd that do? I know you had charts and spreadsheets and
Taranga's been doing quite well. It's more than doubled, close to tripled from the levels I mentioned it at last year, and that's saying something because it was a bigger company than some of the other companies we had talked about as well, and that it was a small to mid-size producer, but it's much bigger now. It was able to acquire an asset. We know that. Mark Bristow over at Barrick through the Ranggold consolidation has made it clear that they want to shed assets that they don't consider tier one. And TERANGA was able to be a beneficiary of that trend in the gold space to pick up a producing mine that has great synergies with their other assets in West Africa, and is also having great exploration success at their asset called Golden Hills, and so they're fast on their way to becoming a 200,000-300,000 ounce a year producer. And the market responded to that in a very real way when I started telling followers of mine to buy TERANGA around $3. I'm sure they're happy now as it's soared well over 10 and closer to 15 at one point.
it's good work if you can get it. And that brings me to MAGNAGOLD, right? And, you know, Magna's done extremely well. I think last year when we talked about it, it traded near the 25-30 cent level. It's near the $1.50 level. And you mentioned TERANGA becoming quickly, you know, on its way to being a 200,000 to 300,000 ounce a year producer. I think MAGNAGOLD is on its way to quickly becoming not only a 200,000 to 300,000 ounce per year gold producer, but also an exciting silver play. The CEO Arturo Bonillas has done an incredible job of very quietly, so much so that he's behind on press releases, and I know this from reading the MD&As. He's done an incredible job of bringing in high-grade, high-quality Mexican silver properties, past producing oftentimes, that I think in short order he's going to be able to either spin out into a separate company or bring someone in to manage the silver division of MAGNAGOLD. And so as well as Magna has done for subscribers, it's an absolute buy at these levels. It's an absolute buy, and I can't wait to be back this time next year, and talk about how MAGNAGOLD did in light of a 5 or 6-fold increase the past year, right?
Well, it's interesting because, and this is why, you know, listening to people who follow these things chronically is important because, you know, at first Magna is a team story. They don't even have an asset, right? And we're going to go out and hunt for an asset. And then it's, okay, well, how do you value that? And then it's, okay, now Magna's got a couple of, you know, highly prospective exploration assets in Mexico that the team is familiar with. And how do we start looking at it from an exploration development standpoint? And then they come out and acquire San Francisco from Aleo Gold, and immediately they have residual leach on the pads, and they're talking about you know, updating the economic studies and putting out guidance. So you've gone from, here's a company without an asset, you know, looking for an asset, to a company with multiple assets, including one that's in production and about to grow. And now you're talking about satellite deposits and talking about exploration here and how that's all self-funded. And so you have to really, at least this was my journey with Magna, is, okay, here's the market capitalization now, and here's what they've done. But here it is now, and here's what they've done. And when you take a look at it, like you say, because they've moved so quickly, they haven't even been able to press release everything that is in the management discussion and analysis. Well, what is it worth now? And when I did that in the letter a couple of weeks ago, it's, you know, on paper, I can make a justification for a much higher valuation, a much higher market capitalization than where it is now. And so, you've got to be able to follow these things along and know that, you know, is selling foolish here? Has it reached maximum value for this term based on the milestones they've achieved? And then, you know, looking down the road, what's next and how much higher can this thing go? Because you're right, back to TERANGA, you got people balking at $3 and $4 and $5, right? And then TERANGA is a plus $10 stock. And so if you can see where it's going and you can communicate that clearly, and you can have the patience, quite frankly, to hang on, well, that's what makes for outsized wins.
You have to know why you bought it. You have to know if that's still true. You have to know where the next, 100 million or 50 million or 20 million, depending on the size of the company and market cap value, is going to come from. And then you have to believe that the team is going to execute. So when I sit here and I take a company that you and I helped finance at 10 cents and recommend it at 25, 30 cents, and it sits here at $1.50, why do I have the confidence to say that I think next year I'll be sitting here and talking about a $3.50 to $5 company? Because I've seen the way the CEO and that team has executed up until now, and they've been very vocal about what 2021 has in store. And that's more M&A, more production, more exploration, all self-funded for the most part, by the way, and just an incredible share structure. So these things matter. Share structure, market cap, catalyst. You need the triggers. That's what takes companies higher. If you can't check a list off and you don't have the access to know how things are developing on the ground, you shouldn't be doing this for a living. It's incredibly risky. So the same confidence I have in the almond and permitting situation, I absolutely have that for MAGNAGOLD, which is one of my top picks again this year.
I mean, there's only a couple left there that we touched on last year that are also, at least on my list this year. Did you want to keep going with the companies?
We have to talk Midas Gold, the company that sat at the 50 cent level. It seems like forever, right?
Yeah, I guess that's mine to talk about. Midas, a lot of things here. First of all, let's talk about John Paulson, right? Because, he was instrumental to putting this deal together and keeping it funded. And then, of course, Barrick has taken a significant chunk, but he was came in John? And convert. Yeah, my buddy John came in and he converted a lot of his warrants.
He did
this year after the share price started to rise, which he's probably even more of my buddy for now. But anyway, and so what that tells you is it cleans up the share structure, which if you've heard us talk for any number of years or in any number of public settings, we're always talking about share structure. And, the share structure of Midas Gold was such that John Paulson owned a large percentage of the company on a fully diluted basis, but by converting those into shares, it streamlines the structure. And if you're thinking ahead, right, we were just talking about Magna and where it's going. If you're thinking ahead for where Midas is going, cleaning up the share structure in that capacity is basically organizing it for sale, which we know Midas would be once it receives its permit, which they're making much progress on as well. And so I should talk about that. They've got their draft environmental impact statement now, which it was a long time coming from the U.S. Forest Service and the consortium of agencies that are working on that. That's out there now. It's entering in an extended comment period, typically 45 days. I believe they've extended that to 60 days, if I'm not mistaken. And so either way, that's going to be ending here very soon. And after that, it's a firm timeline into a final EIS. And what people I think overlook, and maybe I'm reading it differently, is when you get that final EIS, you also get a draft ROD, and the draft ROD is very important because that's the record of decision, and that's like the yes or no, right? And so all those things in combination, right? The permitting process moving forward, which in turn, and the gold price going to record highs, combined with well done promotion of the stock and what Paulson's group did, had led shares to move from that 50 cent level to the $2 level between like June and July. So that was very fast. And they've of course pulled back a bit, but Midas a bit of a different beast in that we know what the asset is. It's sitting there, and if you've paid attention to the story for any length of time, the superlatives that it brings as far as size and grade, but you also know that it's much bigger than it shows on paper. And so the permit coming is the biggest catalyst, right? And the fact that they're going to remediate the project and the fact that they're the first in Idaho to go through the process this way has just made it much longer and contain many more headaches than anyone involved would have wanted. But I think that's what has laid the groundwork for a successful final EIS and record of decision, because of the benefits it brings to not only to the environment, but to the local community. And if you had to add on just one more thing, it also has a critical element in antimony that we know global governments, especially the European Union and recently President Trump, have been more vocal about as it relates to military preparations. And I don't know, something about turning all the cars electric or something. I don't know. There's all kind of stuff that we need precious minerals for.
A couple of quick points on Midas. People tend to call the permitting stage the boring period. I'm going to counter that, because again, if you were out of the stock at 50 cents in June because you were bored, you missed the run from 50 cents to $2. And it's pulled back to the $1.45, $1.50 level. So let me explain to everyone what I believe is going to take it back above that $2 level. Not only do you have the ROD coming up, but immediately afterwards, that's going to coincide with a feasibility study that is going to, for the first time, be able to use higher gold prices than they've been able to demonstrate in the past. Obviously, there's going to be several variables there, but I believe you're going to see a higher valuation for that deposit. That's one. The second thing that'll happen after that is 2021 comes along rather quickly, hopefully, because 2020 seems like it's lasted forever. But once that permit is granted, if it hasn't been bought out yet, exploration can once again resume. And you and I have been to the property, I want to say multiple times together, right, Nick?
Correct.
Yes. Okay. 2 Cessna rides and a little dancing involved. Anyhow,
they flutter those planes.
They dance with the wind. And so listen, what Nick can tell you and has told you, and what I can tell you and have told you, is that the 6.6 million ounces in reserve gold ounces that they've identified are the cusp of what's there. You can clearly see extensions and satellite deposits that could, standalone deposits that could provide millions of ounces in additional reserves. That's going to have to be taken into account for any potential suitor. Think Barrick, who needs the type of mineralization that stibnite can provide. And so do not be surprised if you get a higher gold price, an offer to take it out, maybe multiple offers. And again, don't forget your friend John, he might not mind writing a check to keep others from coming in and taking this thing at $3 or $4. He may want to see just how many more millions of gold ounces are on the property. So this boring period, as people call it, is actually, much like Almaden, an incredible opportunity, I believe, to add to your Midas holdings. And if you're new to the space, because a lot of you are, and think you've missed out because it's gone from 50 cents to $1.50, there's a lot of upside left, and it can happen quickly, as the past few months have demonstrated.
You know what else is in play? Because I was talking to another gentleman who's in the process of building a mine right now, and it's that a debt component is very attractive given the current rates. And so it's not that has to be all equity capex, right? And so just options on the table. And the low rate environment is probably a good segue to start talking about macro things, unless you want to do Revival as well.
No, a quick word on Revival, because I look at Revival as Midas's little cousin, also in Idaho. They do things the right way. It's a world-class team. They're in the midst of drilling. By the time you view this, you'll likely be a day or two away from initial assays from the most current program, which sees 3 rigs turning at that project. And I think that Revival is doing a wonderful job following in the Midas footsteps of taking an asset, exploring it, growing it, and eventually permitting and monetizing it. And oh yeah, by the way, they may have a PEA by year end that outlines what a near-term production decision may look like economically. So a lot to look forward to with Revival.
Oh, well, 100%. Multiple rigs turning, and just a very attractive past producing asset that comes with infrastructure, et cetera. And so let's do macro, because we got a very big announcement to make, and I'm just watching the minutes melt away here. So let's hit on the macro real quick, and then we can get to the announcement.
Let's do it. Some important points. Last year, we talked about what you and I saw in 2020 developing, and that was something that Martin Armstrong, Peter Bookvar, Danielle DiMartino Booth, Keith McCullough, among others, have talked about for quite some time, as have I. And that's the move from public assets into private assets. And that's the move away from bonds, where now you have central banks around the world like the bidder of last resort, basically, right? The move away from that into public assets, hard assets. You're seeing the flight from states like New York into places like Washington State, into states like Texas, where capital is being treated fairly and is being treated well. This is a trend that's going to accelerate because what we have right now is a full out currency war. And, we could go for another hour about negative yielding debt around the world. We could go another hour about Europe and its pivot and its introduction, white papers about a digital euro. It's how they are able to potentially tax everything and get rid of a large chunk of the underground economy that is tax evasive capital looking to evade. It's Europe's way of trying to capture capital that they see as fleeing because they see the writing on the wall, because they've killed their bond market. I've always said the bond market is kind of like the canary in the coal mine. You can see where capital is going to shift if you're paying attention to the moves in the bond market. So that's my brief macro rant, because we do have a big announcement to get to, but it's not a coincidence that given the interest rate environment and given the fact that we are now a stimulus global economy, it's a move to the bottom. It's a race to the bottom as far as currency goes. And that bodes extremely well for gold. I was showing off my cup here earlier. And, don't sleep on the crypto part yet. There's some life there. I couldn't erase it, but there's some life there in some of the better crypto plays. So anything that's an alternative to fiat currencies and anything that screams, I don't trust the government, is going to catch a bid here in the next several years, I believe, in a major way. And you're seeing that pension funds, institutions, hedge funds, life insurance funds, people that never were allowed to speculate in the gold space are now having these discussions about diversifying. And again, it takes a small amount of capital into a small market to make a big difference, right?
Absolutely. The gold space is tiny as it relates to the rest of the market, and certainly the bond market at a couple of trillion for gold to several 100 trillion for the rest of the financial assets, right? And so a move into the gold space, as we all know, doesn't require a lot of capital to move it. You mentioned pension funds. There's been some very public announcements. Ohio announced they were going to allocate some of their public pension funds to precious metals. And that's going to be a cascade effect. It echoes that sentiment you're saying about capital going where it's treated best, whether that's the flight out of high tax jurisdictions or it's the flight from, public assets like bonds into gold. And then I think, I don't want to spend a lot of time on talking about debts and money printing and stimulus, because we all know that. Look, we're at modern monetary theory. They just sent everybody $1,200 checks, and more checks are likely on the way. If not before the election, certainly right after it. And so you start to talk about the things that you always talk about when you make a bull case for gold, right? The debt being higher than the GDP and productivity, et cetera. All that is in play now. And but all that has been in play. What the additional thing that's in play now is that other people were starting to look at gold, right? Because it's now we knew last year we were talking about gold's at record high prices and all these other currencies, but now gold has hit record high prices in US dollars. And that's a big deal. It gets people looking at gold who weren't before momentum traders or people that use screens or whatever it is, right? And so, and then to your crypto point, I've said for years that these crypto people are, what are they, Gerardo? They're soldiers in training for the gold army.
Training for the gold army.
And so the gold army is very much forming. And, you don't have to be Bitcoin or gold, or you don't have to be crypto or gold. They are bullish categories of assets for many overlapping reasons. And we don't got to beat them anymore. It's here. We talked last year about the last chance to get in place for a generational transfer of assets. And that's still very much in play. I said at the top of the half hour that, if I look at some quality companies, they haven't yet ascended to their levels they were at 2016 when the false start of the gold bull market was. And so take a look at, some of the names that we've mentioned here and that you'll of course learn about in the rest of the conference. And as always, we'll be pounding on the keyboard and shaking our network, trying to find new ones and recommending them to our readers, which I guess gets us to the big announcement here at the end. How should we do it?
Let's do it the way we do everything. Let's do it honestly, and let's do it transparently. For the past, since 2016, I've been fortunate enough to have been welcomed into a situation with the Outsider Club, which was founded and grown and developed by Mr. Nick Hodge. And I've been fortunate to write for a division in the Outsider Club that has never edited me, forced me to pick a stock, changed a pick. I've had free reign with the exception of a couple of Oxford commas and semicolons here and there. Other than that, it's been an absolute pleasure. And, as time goes on, we grow, and our focus, and I'll speak for Nick in this case, our focus has always been aligned with subscribers, and it's always been transparent, and we haven't gotten everything correct, but it's always been honest. We've always made ourselves available. We've always spoken directly to everyone and responded to every email that's ever come across my desk. And, I want to say thank you to you, Nick, for the opportunity with Outsider Club. And then I would like to introduce you and give you the opportunity to talk about why I'm following you as founder now and CEO and president of Digest Publishing and Nick Hodge's family office, which I should congratulate you for, and I'm excited to join you on, and I look forward to many, many years of continuing to do what we did at the Outsider Club.
I don't know if I'm all those things. It's like I'm chef, cook, and bottle washer over here. I don't know if I can sustain that trajectory, but it's exciting to be doing something together. It's exciting to be doing something on our own. It's exciting to do something where we have 100% control and can do it the way we want to, which we believe is the right way. And it's exciting to grow something that's our own. And to that end, as Gerardo said, we're launching Digest Publishing, which you can find daily free information at Resource Stock Digest. Gerardo will be doing his interviews there with, thought and opinion leaders in the mining space and executives of companies that we follow and help tell the stories of. And he'll be writing an editorial there as well. And I'll start publishing on Resource Stock Digest as well. I'll be publishing weekly editorials, and in short order, we will have our letters relaunched, and they will take the same format as they've taken for the past years, 2016 for Gerardo, as he said, and in my case, goodness, since 2007. So in the next couple of weeks, we'll have launched Junior Resource Monthly for Gerardo and Junior Resource Trader. Also for Gerardo is his monthly and trading service. And then I'm doing something called Hodge Family Office, where I'll be presenting different branches of the office you can subscribe to for monthly or weekly musings, or all the way up to, as I've been doing for the past couple of years, access to join me in private placements if you're a high net worth individual or otherwise meet the accredited definition. So very exciting times. We'll have logos and links up in this video and the related materials. And if you followed us at all for a week or for a decade, seek us out. We'll make it easy. We'll keep the light on for you, as they say. And we hope to see you over at Resource Stock Digest.
And again, you can expect the same integrity, the same research, the same diligence, the stuff that we take a lot of pride in delivering. And again, we don't get them all right, but every now and then, as Mr. Hodge likes to say, the blind squirrel tends to find a nut, and it's been more nuts lately than in recent times there, Mr. Hodge.
Well, don't go thinking you're smart in a bull market, Gerardo.
Oh, I remember 2016 and I remember 2010 and 2011. That's why we're going to work extra hard to make sure we take advantage of this window, because everyone out there knows this is a cyclical business in space, and you can do very, very well with the right macro backdrop, and you could be the smartest person on the boat and lose people money. So it's a special window I think we have right now, and one that we plan on working hard to help monetize for everybody and ourselves. Nothing wrong about making money in a space that, rewards it. And, we're looking forward to being able to hopefully do that with you guys.
Absolutely. There's a lot of rewards to be had, especially over the next couple of years. And again, we're sorry we can't stay and do a little breakout session, a little Q&A. That's one of our favorite parts. And another favorite part of ours is then walking to the bar afterwards, and we can't do that either. So next year for sure. We hope this was informative, and we hope to catch you in some other venue or outlet out there. We appreciate you tuning in.
In the meantime, write in if you have any questions. Go to resourcestockdigest.com, click on contact us. You can reach out to Nick and myself. We'll make sure to get back to you, and stay safe out there.
Great.